We're watching all about stocks on ET now. Thank you for staying with us. Gaurang Shah is with us as well, helping us with our equity investments. Gaurang, thank you for staying with us on the show. I want to, before we move on to your recommendations for this week, I want to do a recap on something you recommended for us the last time you were on the show. You talked about Cain. It was recommended at 360 with a target of 435. That stock is currently at 317. What's your call on the stock? Would you still recommend a buy at these levels?
It's a perfect opportunity to average out if somebody's bought it. With the kind of discovery that they have in Rajasthan, with the kind of operations that they have in the neighboring country Sri Lanka, and of course the outlook going forward. Now remember one thing, crude has subsided on fallback certain concerns and the data points coming out of the US and Europe. These data points over a period of time will get corrected, and I don't think the crude oil prices can stay at lower levels. They'll definitely start looking upwards. A part of the revenue is also generated in terms of dollars for Cain India. So if I keep all these things in perspective, I think 317 or 320 or close to 300, I would definitely advise to hold on to the stock which you bought it earlier, and if you have the investable amount, please buy more, or if somebody wants to enter fresh, they can definitely do that at current levels.
All right, Gaurang standing by his recommendation on Cain. He says average it out if you can and hold on to it if you've already bought that stock. Let's move on to his first growth pick for this week, Godrej Consumer Products Limited. Take a look.
Led by R.B. Godrej, Godrej Consumer Products Limited or GCPL is a market leader in India's FMCG sector and has household brands like Synthol, Goodnight and Fairglow among its products. The company's fourth quarter earnings beat analyst expectations, with revenue growing 31% from last year. Business in the Indian subcontinent alone grew 21%, with strong growth in the home care and soap segments boosting profits. International sales grew 27% for the quarter. GCPL also bought several companies in Africa and Latin America over the last year. These acquisitions have already started adding to profits and are expected to bring 26% compounded annual growth returns by FY14. However, market men expect inflationary pressures to hurt volumes and margins of companies in the entire FMCG sector. Also, aggressive competition in the soap segment could lead to pricing pressures, which could also hurt GCPL's margins.
All right, so that stock ended the week at 558. Now, the management has announced its goal to grow tenfold in the next 10 years. But Gaurang, like you've mentioned a little earlier on the show, there is a lot of concern right now about the consumption sector. There's slow growth, there's high inflation. There's fear that consumption might be hit in the coming months. How would you rate Godrej Consumer's ability to tide out this tough period?
Well, purely if you see at the number of products that Godrej Consumer has, the number of acquisitions that they have made in the overseas market, and its ability to pass on the price increase or input cost to the end consumer, maintain the sales and the bottom line, I feel that there is a fantastic opportunity. I think very recently the stock was moving in one direction when the market was in the reverse gear. I think recently it made a new 52-week high, if I'm not mistaken. We are of that opinion that from here on, yes, there will be a short-term negativity, but you're not looking at 3 to 6 months. You're looking at 12, 16 months time horizon. Fundamentally, I think it stands very, very tall. And of course, not to forget, the kind of acquisitions that Godrej Consumer has made also gives it the leverage to launch its domestic products into the global arena and bring those global products into the Indian domestic market. So it's going to be a good mix of products that Godrej Consumer has in its bag, and definitely it has got the advantage of geographical reach. So we are of an opinion that it can turn out to be a good investment idea from here on.
At the current market price, that stock is trading nearly 20 times its FY13 estimates of earnings. It is a little expensive right now, so given what you were saying about the short-term expectations, should I be spreading out that investment and maybe make it over the next few months?
There is an advice from our side that don't go 100% all out. Go in a phased out manner, invest 25, 30%, 50% depending upon your risk appetite, and you will get opportunity possibly at lower levels. That you cannot rule out a possibility of a correction of 5 to 10%, and if that happens, you will get it at a better level. So phase out your investment, do it in parts, and see the investment grow.
All right, and could you tell us what your targets are on Godrej Consumer right now, maybe for the next 2 years?
Well, initially we were working with a target of about 675, and in case if things do turn around, and like you mentioned, the management's commentary to see multi-fold growth going forward from here on. So this 675 is a very conservative target. I think it's a return of about, 20-25% from the current market price. But if things turn around and turn positive, then we will definitely scale it upwards.
A target of 675 on Godrej Consumer, and of course Gaurang telling us that he does expect it to do even better. We have a question that's come in from Sunil, who got in touch with us on our Facebook page. He tells us he bought Syntex at 98 rupees. It's 5% of his portfolio, but currently responsible for 50% of his losses. What should he do right now? Syntex ended the week at 52 rupees. What's your call on Syntex, Gaurang?
Well, extremely weak on the fundamental, and the rupee-dollar equation does a lot of damage. And I think over the last 2 or 3 quarters, the stock has been delivering absolute negative numbers. We've seen the stock correct very sharply. So I think any pullback you should use to exit the stock.
All right, exit that stock as soon as you see some sort of pullback in its numbers. We take a quick break. On the other side, Gaurang has a second pick for us this week, Shriram Transport Finance. We'll also answer some of the stock questions you've been sending in during the week. Don't go ahead.